Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having an incredible day to start things off. Bitcoin's price has risen over the $9,000 mark for the second time in 24 hours. On Saturday, the day bulls managed to push the price of the top cryptocurrency to $9,010. But the price quickly rejected at the top of the bull pennant and pulled back to 8,800 support before making another attempt at breaking out. The breakout brought the price of Bitcoin to 9,200, and at the time of writing, Bitcoin's price is pulled back to around 9,100. I think it's currently like 9,105 or something like that, to be exact, if you will, where traders are attempting to establish support on the shorter time frame. Traders will note that the breakout occurred on a slight spike in volume, but purchasing volume has now returned to the levels seen earlier in the day. A few possibilities could play out over the next few hours. Bitcoin's price could consolidate between 9,200 and the bull pennant trend line, which is also aligned with a higher volume node on the VPVR at 8,900. This is, I guess, at the moment, major news. When you click around for new crypto news or what's currently trending, Bitcoin just surged past 9,000. Here's why analysts think more upside is imminent. Bitcoin reclaims key logarithmic growth curve as the case for upside grows. A lot of people are, of course, estimating that it could simply be, it could be a number of factors. We've actually seen today, I think, a number of other stock markets have not been faring very well. A lot of other futures in stock markets have also, I don't want to use the word plummeted, but they've gone down a tid. They're not as high as people expected they would be around this time, especially with a couple of other places around the world announcing that they were going to try to resume operations on the economy, as it were. Apparently, the optimism just completely isn't there. And on that news, we keep getting little spikes in Bitcoin's price, and therefore the rest of the cryptocurrency market also moves up. But it could also just simply be that we are getting closer to the halving. I believe it is currently 9 days, 8.5 days away, depending on how exact you really want to look at it. And I think that's also causing a huge amount of momentum and price as well. I was just reading something talking about the actual how the many analysts are kind of bullish, if you want to say that, on the entirety of the cryptocurrency market right now, just because of how close the halving is to Ethereum 2.0, and therefore there's like this huge ball of energy, if you will, that's in the air, that's kind of a multi-month optimistic move within the cryptocurrency market. So as it stands right now, yeah, the pullback that we had a couple of days ago, where Bitcoin went from 7,700 to 9,500 and back to 8,800, appears is almost slightly completely erased. We'll see exactly how the rest of the day ends up going on. I assume midday, by the time we start getting numbers from futures markets within the States and other places, if they're not faring too well, we'll have to see how things go. Because as of right now, there's still no clear indication if Bitcoin is currently correlated to all of these assets. Stocks go up, Bitcoin goes up. Stocks go down, Bitcoin doesn't go down as far as people thought. Like a lot of people assumed the last couple of days, I believe it was Wednesday, Thursday, and Friday, as stocks were going down, that Bitcoin would also plummet back down. Lo and behold, it has not. Yeah, that's the current Bitcoin cryptocurrency market price news. And without further ado, let's move on. Next up, crypto analyst Adam Cochran has posted a massive 109-part tweet storm. You can read here. I don't have it open. I'll tell you right now, there was no way I was reading 109 tweets. It was not going to happen. Outlining his bullish thesis as the Ethereum 2.0 switch approaches. This update will launch the very long anticipated switch from POW to POS protocol to guard the Ethereum network. Cochran, in a Herculean feat, manually audited 10,000 Ethereum addresses in order to assess what's going on with the network and where the money is flowing. His takeaways are broken down into 32 separate items. However, we can be a bit more concise. Here's part of his tweet right here. It says, at first glance, it seems like Ethereum's supply is very centralized, and thus dangerously subject to control, and thus a cause for bearishness. Cochrane fires back that much of that centralized stash is actually held in massive smart contracts, which exist because of the actual decentralized finance use cases that Ethereum is servicing. Factoring this in, okay? Ethereum is almost exactly as centralized, air quote. Don't go ahead and have a conniption in the comment section. Ethereum is almost exactly as centralized as Bitcoin, with about 56 to 57% of all Ether to Bitcoin going into the top 10,000 wallets. The same, I think I also have it has to be somewhere around here as well. I must have a chart. I think there's also a chart somewhere. Nope, not here. Somewhere else. So, where was I? Going on, he finds that after compensating for wallets that are more than likely dead or lost, and for the Ether wallets that are unlikely to stake their coins, Cochrane estimates that initial yields on Ethereum staking could garner a juicy 12 to 17% per year. People are apparently noticing Ethereum's value, as Cochrane also highlights the growing number of Ether whales, and we've been over that before. Remember the podcast I told you about a couple of days ago? I don't know if any of you actually listened to it, where they actually the guys had Vitalik Buterin on, and they were talking to him and discussing the actual future of Ethereum 2.0. I was actually pretty happy that they were talking to him and discussing with him certain things that I had just assumed they would kind of try to avoid. They were saying, well, you know, when everyone who has over 32 Ether, quick side note, a lot of people keep asking in the comment section, if you have less than 32 Ether, how do you stake? There will be staking pools. You'd better believe it. So at some point, if you have 3 Ether, if you have 11 Ether, if you have 31 Ether, you'll be able to, I assume, as this is how every other proof of stake coin has worked thus far with the cryptocurrency exchanges, you'll probably simply just be able to put that coins or those coins onto a cryptocurrency exchange, and therefore you will receive money because you'll be a part of a larger staking pool, which will then be that entire cryptocurrency exchange. So fear not if you don't have 32 Ether. However, the issue came up in the podcast. They were saying, well, you know, it's one thing for someone to have 32 Ether, but they were talking about the EF, the Ethereum Foundation. They said, well, they have more than 32 Ether. What happens if they decide to stake all of their coins and watch? They were pretty much asking about the centralization of all of this that was going on. They were talking about the other corporations and entities, and they said even potential world governments, which they also spoke about in the actual podcast as well, which was very great. They were discussing the actual future usage of it, and they were the actual testing of governments by governments of Ethereum. And it came down to the fact that pretty much they're not expecting, rather the Ethereum Foundation, I think, has stated that they won't stake all of their coins and a lot of the other coins as far as the centralization, because people are now looking through the numbers and saying, hey, this wallet has 18 million Ether, this one has so-and-so, but they're actually from cryptocurrency exchanges. So I think people are worried about the actual ideas of centralization as far as even like coin ownerships within the market. But then again, like I said, we've also gone over that many other times before. I decided to not have a tab or a real mention of it because I'm tired of that discussion. As far as like I have to have a tab up here somewhere about it, about the actual Bitcoin rich list and how many people or how many few people actually own an entire Bitcoin. And you kind of see as the wallets become fewer and fewer, there are certain wallets out there that have over 100,000 to maybe potentially 1 million Bitcoin or 35,000 Bitcoin. You kind of get into that same exact discussion as well. So there was also the idea that apparently one of the podcasters was asking, he said, what do you do if an institution has been accumulating tons of Ethereum in mass, and when they can finally start staking, they use their stake to try and 51% attack the network? And apparently there are a whole bunch of like attack vectors and all this other stuff that kind of like you're decentivized. Yeah, that's the word. To attack the network, because I think if you perform a 51% attack or attempt to perform a 51% attack on Bitcoin, I think it costs you like an enormous amount of money to be able to try to create one additional Bitcoin. It's not worth it. I think Vitalik said even on Ethereum, when it goes to 2.0, it'll be like a tenfold of this. So it's like you it's like you spending $35,000 to rob someone of $5. It's just not completely worth it. So I guess even more so, the main takeaway of this entire article is that calculations are being done very rapidly, because I said that I believe that this was going to be a major factor. I think there's a reason why institutions are starting to pay a lot more attention to Ethereum, especially when we didn't hear anything about Ethereum for a while. The amount of, and we spoke about this about a week ago as well, the amount of Ethereum that's actually locked in decentralized finance projects is already massive. There's a huge amount of Ether just completely locked away in these projects. You have to be locked away in order to be able to use the product. Cool, got it, amazing. This is only going to continue as Ethereum rises in price. The higher Ethereum rises in price, the more attention that it ends up getting, and the more people end up building their platforms on top of it. If Ethereum can then handle thousands, tens of thousands, if not hundreds of thousands of transactions per second, as the more updates end up rolling out, you're going to start hearing more about this as well. So it's a really weird, perfect storm. You have tons of Ethereum locked for a long time, presumably, if not years, inside of DeFi projects. You have the increase of transactions per second. You have the amount of people who are going to be moving their project onto the Ethereum blockchain, should it be able to do these quicker transactions, and therefore more Ether will be flowing back and forth as people are using them for transaction fees. You have the staking, the issuance rate dropping, the simple amount of Ether that's going to be locked away for staking, and just the actual DeFi is going to be probably over 50, 60, 70%. We're going to start getting those numbers when the actual update rolls out. And then you can also only assume, oh, this was also, yeah. Remember what I was saying when we were talking about the actual podcast a couple of days ago before I had even heard the podcast? I said, it's interesting because they are introducing a new like burn feature into the actual Ethereum blockchain ecosystem, whatever you kind of want to call it. So the same exact way, if I'm sending you or you're sending me XRP, a small portion of that XRP is actually burned as the transaction cost, and just kind of poof, goes away forever. Like, this is why XRP in this way is deflationary. So they were asking Vitalik, they said, what are the new proposals for this? And he was talking about the actual burn mechanism for Ethereum 2.0. And it pretty much goes, if you are paying a transaction fee, let's say your transaction fee, just a random number, is $1. And as the transaction fee is going through the network, it'll be split in half. Half of that, 50 cents, will then go to the miner as a thank you for validating the transactions, and the other 50% will simply be burned. So he was saying the idea is that if their calculations are correct, and the amount of people who they assume will be staking their Ether on the network, because they don't assume that there's going to be any point where 100% of the Ether is actually going to be staked. You're going to have it inside of this project. You're going to have it inside of this. You're going to have it in all the DeFi things. You maybe have a good portion of it actually locked up in the actual staking procedure, but people are going to want their money to also be liquid. So therefore, there's going to be a lot. The new issuance rate of Ethereum will roughly depend on the amount of people who are staking. If they don't have tons of people staking, therefore there would be a lot less coins actually being created. And this is where we got that number that there'll be anywhere between, he said, anywhere between 100,000 to 2 million Ether per year, but it's estimated that it's going to be far below the 2 million, if not below 1 million. He said if the issuance rate is low enough, and their current estimates of how many people are actually going to be staking their coins to be able to creating new coins, with the burn mechanism happening, with the newer and quicker, faster transactions, and more people and governments actually building on top of Ethereum, that, my gosh, I'm out of breath, that Ethereum supply will actually begin to decrease. Because of all the things I just said. The burn rate will accelerate faster because of all the transactions happening back and forth in the actual creation of Ether. So by the end of a year, the next year after that, we'll be able to see that Ethereum supply actually went down even after new coins were being created. Finally got there. I hope you all understood that. I really hope you all understood that, because it made so much sense in my head. And that's what I was saying the other day. I was like, that's really weird. Why would they be introducing a burn mechanism? They've gone through all the calculations. It's that if you can keep Ethereum's supply completely steady, mathematically, in some sort of way, so even with the new issuances and the actual burning of the coins, you're still in a flat line trend of exactly how much Ether there actually is out there. But the demand increases, Ethereum's price goes insane. If you lower the issuance rate from 2 to 0.6, and more of it is being locked away, and even more of it is being locked away in DeFi projects and also in the staking, it kind of leads to this, what was the name of the podcast? I don't remember it. I don't remember at all. I'm pretty sure if you have a podcast app, you can search, like, even just search for Vitalik Buterin, like, the last week. You should find it. I can't remember exactly what the podcast was called, but was it like POV? I don't remember. Anyway, if initial yields of staking Ether are going to be 12 to 17%, like, if you have 100,000 worth of Ether, you could be getting $17,000 worth of Ether, essentially completely for free. Even 12,000. That's 1,000 per month. I mean, I'm expecting everything to go insane. We keep getting tons of Ethereum news. Once again, what it all comes down to is the actual update actually happening. Anyway, yeah, let's move on. Next up, Lumens is in the news. If you had any inkling that using products on the Stellar blockchain could be done privately, think again. The Stellar Foundation announced on Thursday that it has partnered with blockchain forensics firm Elliptic to detect and prevent illicit transactions on the Stellar network. Sounds like fun. Elliptic, backed by Wells Fargo, works with a number of big players in crypto, but its role within crypto is not without controversy. Nevertheless, Stellar is joining. Stellar is joining its growing list of. I was like, which joining? Stellar is joining its growing list of partners. There's a little chart right there for some reason. Elliptic analysts will engage in ongoing dark web research. Okay. Identification of money laundering patterns and the collection of high-quality data linking Lumens accounts to known entities. Sounds like fun. The company said in a joint press release, Stellar Lumens is the cryptocurrency that powers the Stellar blockchain. I would have never guessed that. I thought it was Bitcoin. Shock the heck out of me. Dark web research, I'm fairly certain. I mean, maybe there is with that one person. I don't think anybody's using Lumens on the dark web. Just gonna throw that out there. Here's the actual tweet right there. The organization's announcement of Elliptic's Lumen transaction and wallet screening was unclear as to whether developers and firms building on Stellar would have a choice in having their operations tracked by Elliptic. In response, a spokesperson from the Stellar Foundation told Decrypt, currently, only Lumens transactions will be monitored, which is still terrible. Businesses issuing other assets on the Stellar network will not automatically be monitored, but the infrastructure now exists for them to take advantage of Elliptic's services. So pretty much, if you want to be tracked, you can be tracked. And I assume in the future, you are probably not going to have a choice but to be tracked. I think this comes on the heels of the very long heel, because it's been a very long time since we've spoken about this, of Lumens, Stellar partnering with IBM, and I think a couple of other. There was another big name who they partnered with, and the only one that sticks out in my head is IBM, because they're IBM. And if IBM is using Lumens to build their WorldWire blockchain system, where things will flow through Lumens or Stellar or whatever, one can only assume these transactions will have to be tracked. I did not foresee a future where IBM was using anything, any type of blockchain, and the transactions would not be tracked in some sort of way. So this is not surprising, but it's I don't even want to use the word disappointing. I don't have any Lumens. I don't care about the project. I told you all that in 2017, and yet here we are once again. I assume that Lumens will probably, in some sort of way, I don't want to say a bright future. I assume they'll be around for a while. You don't partner with a company like Elliptic for no reason. They probably have a lot of partnerships, or maybe some partnerships in the works, behind the scenes, stuff they can't simply disclose at the moment, and are therefore trying to make sure that they are adequate enough for their partners, if that kind of makes any sense. This also then goes back to that same question of, them burning the Lumens. I assume this was also done in an effort because they probably have a number of institutions who seem that they are working with IBM and therefore who were like, hey, we want to acquire some, but your supply is a little high. Anyway, yeah. Lumens is going to have transactions tracked now, which is so much fun. I love that. I'm sure we all love being under the magnifying glass all the time. Anyway, yeah. Let's move on. In news, the U.S. Department of Justice is seeking the owners of crypto funds that were held on a crypto exchange known as CoinGather, a small crypto exchange that was seized by the FBI in March of 2018. The seizure came months after the exchange had abruptly ceased operations during November 2017, prompting rumors to circulate that the platform had conducted an exit scam. If you were not around in August to December 2017, I want to say count yourself lucky. It was an awesome time. I was doing more traveling than I had ever done. I was extremely upbeat. I was more upbeat than I currently am. However, is the word egregious? There were an enormous amount of cryptocurrency scams all over the place. There were new crypto exchanges that were popping up daily, and then 3 weeks later they were gone. There were ICOs that were making $15, $25, $30 million. And then like a week later, the CEO was taking a photo of him on the beach. The website went down. This money completely disappeared. So there were a lot of things like this happening. A lot of crypto exchanges that we just will never, ever hear from again had tons of money on their exchanges, 30, 40, 60, whatever, 100, couple of Bitcoin, millions of dollars on it, poof, in a matter of seconds. The U.S. government is looking for individuals who may have a claim to the crypto holdings on the now defunct CoinGather exchange. A warrant shows that the cryptocurrencies currently reside on a Dell PowerEdge server. Neither the value of the crypto held on the server nor the sum is being said or willing to be forfeited or disclosed by the Department of Justice. Individuals seeking to claim cryptocurrencies held in the exchange's former server have 35 days to contact the Eastern District of Michigan's Justice Department. Without having to read much further, because it continues going, if you happen to be one of the people using CoinGather in 2017 and you lost your money, well, this might be your chance to potentially get it back. And I said, I made a noise at the beginning of this article because first of all, there were many websites that were seized during the course of 2017 and 2018. And we don't get news about those coins being re-released, so I just assume a lot of those are have gone poof. But this is, I'm trying to silver lining it. This is nice that they're, willing to give people back their money, because there have been other instances where they have simply just like auctioned it off. Yeah. Anyway, that's that news. And if you used CoinGather, go get your money back. Next up, the popular messaging platform Telegram is offering refunds to investors who participated in its $1.7 billion with a B, ICO in 2018. The ICO initially promised investors its Gram token and a launch date for its decentralized network supporting the digital asset, but the platform, the Telegram Open Network, reportedly ran it's not a delay. They were smacked down by the SEC. Its latest launch date has now been pushed to April of next year. The ICO met swift regulatory rebuke when the U.S. SEC, Securities and Exchange Commission, moved to stop the Gram project last year and charged Telegram with running an unregistered security sale, which was also complete nonsense because, according to a letter to investors on Thursday, published on Russian forum Smart Lab, Telegram states that the project is on hold. I'm going to assume indefinitely at this point. They said, unfortunately, in light of the recent U.S. District Court decisions, we are unable to issue grams to you by the 30th of April deadline date. Telegram says participants can now choose one of two refund options. They can either immediately claim 70%. They can either claim 72% of their stakes. Why can't I read today? 72% of their stakes, or they can wait another year for 110% of their investment, which will include a 10% bonus. That's actually quite interesting. It's not a riddle. I forgot what it's called. It's the idea that imagine someone walks up to you and they say, I can give you $100 right now, or you can wait 5 days and I'll give you 150. It's really weird. People usually choose the 100 immediately because they want the immediate gratification of having the money. And most people don't want to wait or like the idea of waiting the extra days to be able to get the 150, because the extra days waiting kind of don't mean anything to them with what they could do with that 100 right now. Interesting. So yeah, the land of the ICOs and their entire epic stories, they're just completely gone. We no longer hear about ICOs unless it has something to do with the SEC breaking them down, tearing them down, shutting them down. We now have IEOs. You realize you no longer hear about STOs. Those are probably not going to be a thing for ever again in some sort of way. If you were part of this and you want your money back, you can get it now, or you can wait a year. A year seems a little excessive, but that's 110% is kind of a good incentive, but then you also have to once again think, like, what could you have done with that money right now? Like, imagine you get the money back and you can invest it in crypto and make 3, 4, 5 times your money, as opposed to just getting an extra 30-something percent, 40%, 37% back in your money. Yeah, it kind of is what it is. The SEC knew exactly what they were doing. For those of you who were not here, the SEC waited until these things were going to be launched, and they told the companies the day before that they had done something illegal. Like, actually the day before, not jokingly. The day before, the SEC had been looking at them for years as to what they were doing. The day before it was going to launch, the SEC told them, hey, you're doing something wrong, and they shut the entire operation down. Anyway, yeah, that's the Telegram news. Let's move on. Next up, Signum Crypto Bank, which is the world's very first digital cryptocurrency bank based out of Switzerland, has announced the integration of the world's third largest cryptocurrency, XRP, for withdrawals, deposits, exchange, and other banking services on Thursday. The Signum Crypto Bank announced that it had successfully integrated XRP into its digital banking platform, regulated by FINMA, of course, and that users will now be able to better expand their crypto investment portfolio through XRP tokens. The bank's users can use the deposits from fiat currencies like the US dollar, the euro, the Swiss franc, or Singapore dollars to purchase, store, and trade XRP cryptocurrencies. Additionally, customers can also boost their liquidity in fiat money by moving their XRP tokens into the deposit accounts. Sure, why not? Co-founder, okay. Matthias Imbach lauded the partnership in the announcement by saying that Ripple has shown promising growth prospects in recent years, with over 300 banking and financial institutions under its belt. The whole concept of being able to send money anywhere in the world at low cost instantly is revolutionary. Cool. We normally, and I guess it's ironic in its own way, we normally don't hear about the integration or the custodying of XRP through banks. Hardly ever. We normally hear that institutions and major banking corporations or whatever are usually accumulating Bitcoin. And most recently, we get a lot of news about Ether as well. It's very far and few in between. We hear about partnerships, but as far as the actual integration of withdrawal, deposits, exchanges, and other banking services for XRP, very far and few in between. There's no news as well if this bank also offers already Bitcoin and Ether. This is very cool. Let's see how this ends up working out. I see the trickle of Ripple XRP news is slowly beginning to return. There were a couple of months where we really had nothing. I'm not sure if it was simply the market downturn, if there was simply just maybe no news, a lot of non-disclosure agreements. But alas, they're returning once again. The news is normally heavily focused on the top 3 coins. Sometimes you'll get news about other coins kind of popping in, but even when you look around, they're real. I mean, listen, there really isn't a lot of news about other coins, unless they shoot up by like 35% or something insane happens. Anyway, yeah, that's the XRP news. Congratulations to them for the integration. I gave it to the end of this year. We're probably going to hear a lot of banks discussing or openly stating that they're going to also be supporting other cryptocurrencies as well, as far as like the actual custodying of or transferring of or depositing of, which is completely insane if you've been here for years, because banks used to hate us and now they all love us because they realize we have money. Anyway, yeah, let's move on. And to finish things off, according to recent data, crypto participants known as Bitcoin Whales have been steadily accumulating Bitcoin and not selling since Black Thursday, which happened on the 12th of March. I hate when people, whatever. You know what I'm talking about. People keep trying to make this a thing, and it keeps popping up. No one on Reddit, on Twitter, on anywhere else is using the term Black Thursday except for people in articles. On-chain data and blockchain analysis firms indicate that the number of Bitcoin whales with 1,000 to 10,000 Bitcoin or more on a single address has increased significantly. In the crypto world, investors who hold a large number of digital assets are typically called whales. There are almost all types of whales, like Bitcoin whales, Ether whales, Bcash whales, please. The definition of a Bitcoin whale would be a person or organization with around 1,000 Bitcoin or more. Considered a small whale. Here's the actual list right here. I think there's an even better one as we kind of scroll down. On-chain data from December 17th, 2018 shows at the time there were 91 addresses. 91 with 10,000 Bitcoin or more. Today's statistics show there are now 106 addresses with 10,000 Bitcoin plus. And while that, the 91 from 106 doesn't seem that significant, they've accumulated 10,000 per address. That's a lot of Bitcoin. The data highlights that whales with 10,000 Bitcoin or more have grown by 16.48% since 2018. On the 25th of February, 2019, there were 1,709 addresses with 1,000 Bitcoin or more. Since then, the increase of smaller whales has been around 17.4%. Similarly, on the same day, there were 100 addresses and the increase of 106, approximately 6%. Here's the actual, this is what I was thinking of earlier. Here's the Bitcoin rich list. There are currently only 3 addresses, 3, that have anywhere from 100,000 to a million Bitcoin. However, the bulk is always roughly around here. There are a massive amount of people who either have no Bitcoin or have up to around 0.001. And this is also a number that has also been increasing the last couple of weeks as well. People who are actively trying to at least accumulate and get an entire Bitcoin, because I think that's usually the dream. Anyway, yeah, this is also something to be completely expected. If you expect a values asset to go up, you are going to start accumulating more. I think it's more so the conversational topic that the wealthiest people continue to accumulate massive amounts of Bitcoin and Ether, and it has to do because money. If you see that Ether is 200 and you are expecting it to at least go back to 1,400 and you put in $1 million, well, you've made 7 million. If you start accumulating Bitcoin and you see it's at 8,000-9,000, you expect it to go to 100,000. That's 10 times your money. So yeah, it's only logical, but it's interesting to see because this, in my mind, is still going to play out to be something very dramatic. I said years ago that normal people would not be told to get into Bitcoin or to the cryptocurrency space. When we start hearing more, this is why I was very excited a couple of months ago and even last year, when we start hearing more information about retirement funds and retirement accounts getting into cryptocurrency, which we did last year, is going to be very significant, because it's only when normal people are told to start, allocate a portion of your money into Bitcoin. They're not being told this right now. Bitcoin, whenever it's on the news, is highly speculative. They make sure to talk about whenever there's a very huge drop. When Bitcoin hits over 50 to 100,000 per coin, we're going to start seeing banks and institutions talking about that they're opening up like Bitcoin retirement accounts, or like some type of a custody thing for their customers for the long-term proposed growth of where all of this is going to go. But at that point, if people are having an issue trying to accumulate an entire Bitcoin at 9,000 per coin, imagine at 100,000. So these people will only have $500 worth of Bitcoin. And is during this time right now, the amount of people who are accumulating these coins in mass, once again, very finite assets. There's not really a lot to go around. So the rich, and even you're part of this as well, making sure that you accumulate as many cryptocurrency assets as possible, because you understand where all of this is going, and therefore you want to be way ahead of the curve. But yeah, it's all fascinating to think about. I'm waiting for normal people to get into the market. But at that point, Bitcoin would be so large. Like, if we ever do end up hitting $500,000 Bitcoin, it's going to seem like a complete dream to billions of people on the planet to be able to even have fractions of a Bitcoin. And you're going to have that awkward conversation with your friends like, oh yeah, man, wow, that's crazy. I wish I also had some Bitcoin. Good thing I do not. Wow, that is crazy. It's going to be really uncomfortable in a couple of years. I'm telling all of you, I can see it clear as day. If Bitcoin hits tons of money, your friends go, oh, so, and I'll even put it to you this way, in like the nicest way. I remember getting into crypto. I remember getting into all these other things. And I had a couple of friends who started getting into Bitcoin and into Ether years ago. And I remember them, I don't know if they were bragging to me or what it was that I remember one of them told me he had 0.01 Bitcoin. And he kind of was like, yeah, I have more Bitcoin than other people. But he kind of like made it seem like he had more than me. And also other people, I remember somebody had bought like 1/10 of an Ether, and he was also kind of bragging. So get ready for those people in about 5 to 10 years who are going to be telling you, man, I have 5 XRP. Isn't that crazy? You're going to be like, wow, you have a whole 5 XRP. That's something. You have an entire Ether? Oof. All right. I mean, don't break the bank now. Anyway, you all know what I'm saying. I know it's going to happen, and I'm done rambling on. So yeah, let's go. As always, a very special thank you. Hold on. There we go. Very special thank you to my Patreon supporters. Sorry. I hate that. When I unlock my phone, all the messages start flying in at the very top, and then I can't read anymore. A very special thank you to my Patreon supporters: Professor Wally from Gunbot University, Utopia569, Yasha Harari, Moonman High XRP, The Pothead, Joshua Vineyard, Martin Steuer, Chongololo, Tsongololo, Nostromo, John Sarston, The Animal Reader, A Bibliophobia, Barebones Mining, Todd Mullis, Adam Graysick, Mohammed Maroni, Massive Ventures in Thailand, Brady Niels, Jared Schneider, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Crypto Artist Cold D3D, Nicholas from Earth, One Peace, One Love, Damien Setsuna, Nick Kanaya, Richie III, Vlad the Impaler, Crypto and Beer Shipmate. Where am I? Paxist, Nick Mangialavori, Anthony Charles, Jim Gardner, Jeremy Fox, Minting Coins, Miller, his chest every day, and Kyle Leg Day. Yes to Crypto, Bodie McBoatface, Anytime Fitness, Monk's Corner Staff, Arfmedic17, Bake Me a Cake, Tigger Macho Nisa, On Crypto with Lionel, Prayla Michelle, URL, and Hold On, I Have to Sneeze. Thank you all very, very much for your support. Thank you to everyone who is a member of the channel. And thank you to everyone who is a clicker of affiliate links. You're awesome. I'm very tired today. Sorry if I sound fatigued, or if I felt like I was like rushing through it. I don't know. I'm like my brain's kind of all over the place. Like you know that feeling like when you sleep for too long and you have that fogginess. Yeah, I'm pretty sure I slept for like a bit too long, and my brain's kind of like all over the place. Even looking at the screen is like annoying. Like I've been like looking away from the screen as I've been talking to all of you at the moment. Where is it? There we go. Bitcoin is currently up by 3.4% at the time of me making this video. It is at $9,100. Ethereum is up by 1.6. XRP is up by 3.2. Litecoin is up by 4.7 or 4.77. No actual idea as to why. Ethereum Classic is up by 12%. Sure. Maybe as the day goes on, we'll get some type of news as to why this is happening, or maybe someone else in the comment section can scream at me and then enlighten me as to how I don't know what's happening with Ethereum Classic, and therefore, yeah. Crypto.com chain. I mean, a lot of these coins are just, I mean, it could just also be nonsensical. Like Dogecoin is also going up, and there's like a quintillion Dogecoin. Anyway, it's nice to see the market going up, especially on a Sunday, which doesn't typically happen. Most people kind of stray away from the markets until Monday, but maybe there's something happening that we just don't know about. Maybe something is going to take place, or it could just simply be future optimism for everything that's going to be happening over the next couple of months. Either way, it's all incredibly exciting. I do hope that you all enjoyed. You all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope that it's absolutely fantastic. Thank you all once again for watching and or listening. And I will most certainly be talking to you all soon. See you.